You might be wondering if life insurance or a Roth IRA is the best retirement plan for you. Today, you'll learn the difference between the two and why the life insurance or the Roth IRA might be a better choice for your retirement. You've probably heard a lot lately about the idea that you could use life insurance instead of the Roth IRA for retirement savings. The person selling you insurance might even call it a super Roth, or say this is what the wealthy use instead of a Roth IRA. Before you make the choice and buy that life insurance or invest into the Roth IRA, let's go through the differences so you can decide which is better for you. Let's talk first about the life insurance. Life insurance is first and foremost insurance. And with insurance, there are going to be costs for insurance. So when you're buying life insurance for retirement planning, realize that there are costs in there to pay for the insurance part of it. Generally, if you're talking with a life insurance salesperson, they should let you know that when you are putting money into life insurance, there's often a 7-year break-even period where the money that you put in doesn't actually go above, you don't start earning interest or you don't earn above what you put in until about 7 years. That's called a break-in period, break-even period. Also with life insurance, there is no tax deduction. It's not like your traditional 401k where maybe you get a lower tax situation. There is no tax deduction at all with insurance. With insurance, with life insurance, you could invest in a situation where it's guaranteed, or it could go up and down in the market. And there could even be some ideas where it goes up and down related to the market, but there's some sort of floor, some sort of protection where it gets credits, you get interest for the up part of the market, but you don't go down, you don't lose when the market goes down. So keep that in mind of how the different insurances, how you might earn money on there. You get to choose how you earn money with the life insurance. Also with life insurance, you can take out the money that you've put in tax-free anytime that you want. So if you put the money in, when you take money out, that's called your basis. Principal is another word that you might be more familiar with. You can take that money out tax-free as long as it's set up correctly. You might hear it called a properly funded contract. That's the main way that life insurance is set up so that when you put money in, you could take out that basis, your principal, tax-free. You could also take out any of the gains, the interest that you've earned. That could come out too with no penalty, again, as long as it's set up in a properly funded way, but there's taxes you'd have to pay, right? If you've made money and you've taken out all this basis, all the money you've ever put in, now you've got the interest, the gains. You can take that out with no penalty, but there are taxes. You could, though, too, take out a loan on your insurance and get that loan out tax-free. Remember, though, it is a loan and it is going to be paid back either by you while you're living or it would be paid back upon your death. That's how you take money out of insurance, how you grow and invest in insurance. Now with the Roth IRA is not insurance, so there is no insurance cost. So you don't have to worry about a break-even period because the money that goes into your Roth IRA, there is no cost for the insurance. There's also no tax deduction. A Roth IRA, again, is unlike your traditional 401k where your taxes show up lower this year because you put money into that account. And just like with the life insurance, you could also invest in your Roth IRA to where it's a fixed interest rate or variable up and down in the market. You can even go up with the market, but have that principal protection so that if the market goes down, then you don't lose as well. Those are the choices you get with the Roth IRA, how to invest. With your Roth IRA, you can take out the basis, the principal, the money that you put in. You can take that money out tax-free anytime as well. The interest, the gains that you've made, you can take that out anytime, but if you're below 59.5, there's a 10% penalty most of the time where you could take out that tax-free money, that basis without any taxes, without any penalty. You can take out that interest and the gains, but if you're below 59.5, there's a penalty there. There are no loans available with the Roth, but when you turn 59.5, quite often you've met the rules. Now that interest, those gains, that money becomes tax-free because you met the rules of the Roth IRA, where it's designed for the future, designed for your retirement, and those interest and gains come out tax-free. So when you look at life insurance versus the Roth IRA for your retirement, you'll notice there really aren't terribly too many differences at all. Let me highlight what I think are the big differences for you to consider. First and foremost is there's going to be the cost of insurance for insurance because you're buying insurance. It's not only a investment type of vehicle. You should buy insurance only if you need the insurance, and then if you have the ability and want to add additional money into it towards your retirement, perhaps that's something to consider. So you've got the extra cost of insurance because it is insurance. On the Roth IRA side, the big difference there, kind of the big downside, if you want to consider that, is there are limits on how much you can put in. There's limits on how much you can put in based on your income, whether you're even allowed to put money in. It might be the case where you're looking at life insurance because the Roth IRA has been taken away from you, perhaps, as a investment. Although keep in mind, your traditional 401k might also allow you to put money into it instead as a Roth 401k. So if you like the idea of a Roth, look maybe at the Roth 401k as an idea. When you're comparing life insurance to the Roth IRA, I think the problem a lot of people have is they think there's only one way to go about it. Life insurance is the only solution. The Roth IRA is the only solution. You should consider all the different things that are out there, see which one fits best for you. And quite often I found that the answer, the solution, when you're trying to do something like retirement planning is not the one product, but the multitude of different things that you're buying for different reasons. Now, retirement's not just about the money. There's a lot of other non-financial aspects that are out there. Take a look at my next video, the most overlooked aspects of retirement, when I ask Fritz Gilbert what life is like on the other side. He's already been retired for 4 years, and he's going to tell you all about it. Hi, I'm Jeremy Keil, owner of Keil Financial Partners. And if you're interested in seeing how we help our clients get more income, pay less in taxes, and avoid big retirement mistakes, make sure to go to keilfp.com. That's KEILFP.com.